This is a download from BFM 89.9, the business station.
We'll go to Dodge O'Dolan, who joins us all the way from New York. Dodge, good morning. Could we discuss the internet internet stocks sharp fall last week? Netflix was routed about 7%. Pandora fell quite sharply, and the trading of Sync Technologies was also suspended after rising 36%. The SEC said there were concerns regarding the accuracy and adequacy of information in the marketplace. Does this remind you of the pre-dot-com bust in 2000?
Yes, it does in many ways, Julian, and good morning. Particularly, we're talking about momentum stocks. So Internet and also the Russell 2000 type stocks have benefited. Netflix and Pandora, as you were saying, benefit from momentum, from the lack of opportunities within the short time frame that one can achieve with the stocks that have really been trading opportunities. And there has been a risk-off given all the economic and more political actually, news that came out last week. And I think there was some profit-taking. Also, the lack of a clear time frame for new product development, new product innovation and announcements, particularly, let's say, with Apple, for example, really did not give a reason to buy the pullback. And so there is no really specific reason for the pullback, but given the momentum nature of the stocks we're talking about, the quality, the amount of the pullback is not surprising, and yet we really haven't broken any levels of support. So we'll be watching this week in reaction to the information that comes out in terms of earnings.
Now, from the viewpoint of the earnings structure of these companies, are there major differences between now and before the year 2000, before the dot-com bust?
Not really. In relative terms, we're talking about new product development. Yes, the technology that's involved is so far advanced, so you can say, oh, it's really, really different. But given that the technology framework of the stock market and the buyers of technology stocks, particularly internet stocks, no, it really hasn't changed. It's the same picture over again. The more things change, the more they remain the same.
Now, many analysts are talking about the possibility of Apple hitting an all-time high. The stock hit a low last year in a post-Steve Jobs era, but has climbed about 70% after it went through a split. What's your view on this?
Yes, Julian, I do believe it's going to go to an all-time high. The fact that Apple split makes it so much easier to gain momentum on the upside because there'll be more buyers. And we're talking about 105, 108, a number very close to the round number 100, and we're fairly close to that already. Multiple new products towards the end of the year, a completely redesigned iPhone, which we believe will happen this year, will be a reason to support earnings growing faster than what the street is expecting. Yes, they will have a new technology, the iWatch, but, a new product like that's not going to be big enough to really drive it. It's more going to be, we're going to be looking at a redesigned iPhone, for example. That's going to be important. And we're seeing analysts beginning to upgrade their estimates. J.P. Morgan has, Cowen and Company has, Royal Bank of Canada has, Needham and Company has. So we're beginning to see some momentum in those analysts that are following the stock. It's also right now undervalued relative to the S&P 500. Apple is trading at a price-to-earnings ratio of 15.2, and that's a meaningful discount to the broader S&P, which is more like 19.3, 19.6. And we're not talking about just any large-cap stock. We're really talking about an industry leader that is going to gain momentum just by being Apple.
Now, we saw news of China accusing Apple of threatening national security through the iPhone's ability to track and timestamp the user's location. How do you think this would color Apple's movements over the next few months?
It will. When you take a look at the source and the reason, it's coming through the back channel of CCTV, which is China's state broadcaster. So China's stepping up again its propaganda efforts, and yes, it is a concern, and it's going to be an ongoing concern, and it will color people's reactions to the advancement of Apple and its technology. But in reality, the absolute concern about what technology can do in terms of spying, etc., is going to be across the table, and we're already facing this not just with what China's implying with Apple. It is something that's coloring the whole world at this point. Europe, America, U.S., obviously. So, yes, it is more of a propaganda effort at this point, and it does suggest that the U.S. and China are going to have to negotiate a lot of different things, including what Apple is implying at this point.
Recently, Apple signed a deal with China Mobile that will open up a market of about 760 million subscribers for the iPhone. How will this affect the deal, and do you think that there is a big chunk of earnings within Apple that analysts have factored in coming from China Mobile?
China Mobile will probably go through. My guess is that what is happening now will not affect the absolute decision to succeed or fail in terms of China Mobile, but it does make the negotiations harder, which is what China is really good at. It makes it harder for Apple, and Apple will probably have to give up more than it expected in order to achieve the presence and a potential presence in the Chinese market. So I don't think it's a deal breaker. Typically in situations like this in the past where China has brought up issues not directly related to the deal itself but affecting the deal, negotiations have worked out because the promise of revenues and market share in a market that's huge tend to outweigh the risk involved with not agreeing to some kind of negotiations with China.
Are you looking at other tech stocks in the space? What about stocks like Google? Do you think that Google is something that is worth holding in a portfolio?
We are looking across. We were talking about earnings coming out this week. Intel's coming out. We would be a buyer of Intel with a close above $31.36. With regard to Google, we see support in Google at 562.50, and we would be investors with Google closing above 566.50. Yahoo's going to be coming out on Tuesday. Not as clear as Intel is or as eBay. It has to clear the 200 moving average, which is where longer-term investors have an average price. So we're looking something above 37. eBay over 52, it would be a trading opportunity, and it would be an investment opportunity over $53.50. And looking at some of the others, we're positive on Microsoft if it can close above $42.35. Some of the ones that are not coming out, Western Digital, at least not coming out with their earnings this week, we'd be a buyer on pullbacks to $97.75. That's where it is now, back to support near $96. Navient Corporation, NAVI, which is an internet services, BGC Partners, which is an internet-related company, are all buys. On the negative side, not all of them are positive. We would be watching for Checkpoint Software if it closed below $62.75. We would be a seller of Logitech International on a rally to resistance near $13 and a close below $12. We're also watching Web.com and Digital River. So there are plenty of opportunities. The earnings season is kicking into high gear, particularly in technology. So we're definitely going to be seeing opportunities both on the long and the short side.
Thank you for joining us. That was George O'Dolan, Chairman and Chief Investment Officer of Lander & Fused Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.